All right, good evening, everybody. Uneducated Economist here. So, in this video today, we are going to be talking more about the issues of the catastrophic events that are now happening within the economy that is absolutely going to destroy everybody's lives and take away all their retirement, and everything about how they've worked hard is going to just evaporate in a flash. Right? We're here to scare the hell out of you today, the Uneducated Economist. Now, we have been talking about credible threat theory for quite some time, and it was actually a viewer of ours here, Joshua. I want to thank Joshua, who pointed out, he said, hey, at 56 minutes and 34 seconds, you called it last night. He said that you said that they were going to be like, what can you imagine if they did this 90-day suspension? Because of course they talked about it. It was rumor. And I was joking around about it, but sure enough, I mean, it's right here. Let me back it up here a little bit for you so we can hear it. But I thought it was pretty good, and I want to thank Joshua, and I just wanted to play it again for us real quick here. Let me get it queued up. There we go. To jump out of control, all right, or actually goes down. All right, if that was to actually take place, I mean, can you think about like what would happen if all of a sudden like all the tariff scare just did get like a 90-day suspension or something like that? Like, talk about the ultimate credible threat theory, man. That would really be playing out then. I don't. So now, I said it at the time, I don't really expect that to happen, but then bang, sure enough, it happened less than 24 hours later after I had said this. I mean, this video came out like literally last night I did the video. And so to really have that kind of premonition to think, okay, are they going to do a 90-day suspension? It wouldn't surprise me. If it wasn't 90-day suspension, it would have been something else, right? Because ultimately, it's the credible threat theory that is at play. And once you recognize and you see the credible threat theory, then it's easy to start calling these things out. Even if I was half-heartedly joking, it seemed reasonable. It would be like, man, that would just be awesome. It would send everybody just on this euphoric rocket ship of a ride. And so here in the middle of just being absolutely terrified of everything coming undone, we saw one of the greatest days on the Dow. Right? Like, I mean, it just absolutely blows people's minds. I mean, you should see the comment section of today's video that I did earlier this afternoon. It's filled up with all these people who are like, man, look all this money that I made. All you losers who are like, trying to get out of the stock market, blah, blah, blah. Like, there was really a bunch of negative comments about it. And they just kind of went on and on with it. And to me, I just find it just so like absolutely incredible how much people still hang on every word that is coming from the Federal Reserve, and how it is that they use that programming that people have of the Federal Reserve in order to guide the markets. And then to see Donald Trump play the same game, it's like, it's no doubt in my mind now that if you truly internalize the credible threat theory, you would absolutely be making the best decisions for your life. I mean, I'm having people who are now contacting me saying, dude, you are absolutely right. You have nailed this. When I opened up and saw the news this morning and seeing the headlines and looking at all the federal officials coming out and all of them talking about this inflationary expectation that is going to be elevated because of it all falls in to the same line of the credible threat theory. Like, everything lines up perfectly. I got to share these things with you. Like, when it comes out and it shows how well it plays out, like when the information comes out and it just plays out so well. Like, I had no idea how they were going to keep an elevated inflation expectation. All I knew is that they were going to do it. Getting high and staying high. It was the video that I'd done a very long time ago, and it talks about this exact scenario. I didn't know they were going to use tariffs. I didn't know Trump was going to be all up in everybody's face about it and doing the threats and how he's going down with it. And there is so many good logical theories on why he's doing it the way he's doing it. But if I could call out and just say, hey, at some point we are going to find massive inflation expectation going into the future. You can't just benign do it to say, oh, by the way, we think there's going to be inflation going into the future. People wouldn't care if you just say it. They got to believe it. And it's got to be hitting them hard. And you think about it, like how well Donald plays this damn credible threat theory. Day one, tariffs. I mean, in 30 days, tariffs. I mean, on this day, tariffs. On that day, it'll be tariffs in 90 days. I mean, it's just like, what tariffs, right? Like, at what point it was just like, he shows this big chart, here's what everybody's going to get, but that was like 2 days ago, and that doesn't make any difference anymore because that's out of here for 90 days. Right? I mean, is this really like, if you just sit back and you just look at it and you're like, okay, so none of that actually is right. None of it's true, right? Because you had this big poster, you showed everybody, this is what everybody's going to be inflicted with. And then only to say, wait a minute, just pitch that thing out there. 10% for everybody for 90 days, not you, China. You see how quickly this is changing? People have no clue of what's happening. Keep the fear, uncertainty, and doubt absolutely rolling. And this is definitely playing in. Here, let me read this super chat real quick from Milos, thank you so much for the $10. Thank you, sir, for all you do. I really appreciate the support, man, and thank you for that $10. Now, let's break some of this stuff down. I mean, we got 499 people here, 59 likes, 60 likes. Keep hitting that like button. We're going to get more people up in here, and let's break down this credible threat theory. Any questions that anybody has? I know the neutral interest rate is difficult. I get a lot of questions about that. This is the most important part of understanding the credible threat theory, is that the neutral interest rate, which is the rate that is neither accommodating nor restricting the economy. It's when the Federal Reserve is being neutral, right? Now, nobody knows where neutral is, and this is where it gets really interesting, is that the neutral interest rate was very close to zero. Okay? And once it was close to zero, the Federal Reserve essentially had no more monetary policy, because dropping below zero was not a concept other than going into negative interest rates, which is not something that the Federal Reserve was intending on doing. They knew that the lower bound was going to be a problem. They knew the neutral interest rate was eventually going to get to zero, and that the effective fund rate was no longer going to be the tool that they could use in order to stimulate the economy, because typically the Federal Reserve would want to lower the Fed funds rate around 5%. By lowering it 5%, they would spark economic activity. People will go out there, buy houses, cars, go on vacation, and businesses would want to start up and invest into operations, expand their operations, and they would hire people. By hiring people, people would go out there and start getting more money, spending more money in the economy, supply demand imbalances, and they would find inflationary pressures that would come from it. Interest rates, they want to do the opposite. They would raise interest rates. Being the neutral interest rate would be the rate that is neither accommodating nor restricting, that neutral. Being close to zero meant that the monetary policy was no longer going to work for him. And now, it's not me who's making this stuff up. This is literally coming from Ben Bernanke way back in 2002. Right? So when you go to Ben Bernanke's speech, it's deflation, make it sure it doesn't happen here. He explains it like this. A deflationary recession may be different in the one respect from a normal recession, in which that inflation rate is at least modestly positive. Deflation of sufficient magnitude may result in nominal interest rates declining to zero. This is when the Fed funds rate gets to zero, all right? Or very close to zero. Once the nominal interest rate is at zero, no further downward adjustment in rate can occur, since lenders generally will not accept a negative nominal interest rate when it is possible instead to hold cash. At this point, the nominal interest rate is said to have hit the zero bound. Now, this is something that Ben Bernanke was talking about years and years before it happened. Literally, the speech came out November 21st, 2002. He goes on to say this: because banks conventionally conduct monetary policy manipulating the short-term nominal interest rate, some observers have concluded that when the key rate stands at or near zero, the central bank has, quote, run out of ammunition. This is Ben Bernanke saying this stuff back in 2002, before it happened. Like, literally, when did the great financial crisis start up? What, in 07 or 08? Like, when did it really start to impact and hit everybody? They were dropping interest rates to zero back like 6 years after this speech was given. They knew it was coming. Like, they predicted it, right? It wasn't a prediction. They just knew it. It was systematically happening, right? So they knew it was an event that was on its way. It was well underway. All right. So the central bank has, quote, run out of ammunition. That is, no longer has the power to expand aggregate demand and hence economic activity, right? Just like we were saying, if you drop interest rates, you can spark that economic activity, getting businesses to hire people, people working, earning money, spending that money into the economy. That's aggregate demand. They would not have that. They would not be able to do it. It says right there, it is true. It is true that once policy rate has been driven down to zero, a central bank can no longer use its traditional means of stimulating aggregate demand and thus will be operating in less familiar territory. So they knew it was coming. They were like, okay, we're going to be hitting the lower bound soon. This is going to be a crash and it's going to be a bad event. It's going to be bad. They knew it. They knew that they were going to run out of monetary policy in order to stimulate aggregate demand. The central bank's inability to use its traditional methods may complicate the policy-making process and introduce uncertainty in the size and timing of the economic response to the policy's actions. Hence, I agree that the situation is one to be avoided if possible. It wasn't possible. They couldn't avoid the situation. So they knew that they was going to come up with another policy tool. They knew that it was going to take something more than the adjustment of interest rates. They knew that it was going to have to take something of unconventional methods, and they figured that part out. But he had to describe it with a particular story. Curing deflation. Let me start with some general observations about monetary policy at the zero bound, right? 6 years before it happens. Sweeping under the rug for a moment some technical operational issues. As I have mentioned, some observers have concluded that when the central bank's policy rate falls to zero, its practical minimum monetary policy loses its ability to further stimulate aggregate demand in the economy. It runs out. It's gone. At a broad conceptual level, and in my view, in practice as well, this conclusion is clearly mistaken. Really? So now you've been using monetary adjustments through interest rates, right? Interest rate monetary adjustments in order to stimulate aggregate demand. And all of a sudden you're going to be at the zero lower bound where you run out of monetary policy tools, or at least the traditional ones, but you're saying that you can still stimulate aggregate demand? The conclusion that you wouldn't be able to do it was clearly mistaken. Indeed, under a fiat, that is paper money system, a government in practice, the central bank in cooperation with other agencies should always be able to generate increased nominal spending and inflation, even when the short-term nominal interest rates are at zero. They figured out a way to do it. They said, hey, we don't need your interest rate adjustments. Here. Let's continue on by telling a little story. The conclusion that deflation is always reversible under a fiat money system follows from some basic economic reasoning. A little parable may prove useful. Today, an ounce of gold sells for $300, more or less. Now, remember, this was back in 2002 when he gave this speech. Now, suppose that a modern alchemist solves the subject's oldest problems by finding a way to produce unlimited amounts of new gold at essentially no cost. Moreover, his invention is widely publicized and scientifically verified, and he announces his intention to begin massive production of gold within days. What would happen to the price of gold? If all of a sudden this dude out of nowhere comes up, scientifically proven, that he is going to produce an unlimited amount of gold with very little cost or energy into it, what would happen to the price of gold? Right? Presumably, the potentially unlimited supply of cheap gold would cause the market price of gold to plummet. Indeed, if the market for gold is to any degree efficient, the price of gold would collapse immediately after the announcement of the invention, before the alchemists had even produced and marketed a single ounce of the yellow metal. See how they're going to use their words? Ben Bernanke talked about it years before it happened. He says, hey, this is unavoidable. At some point, we are going to hit the lower bound of zero, and monetary adjustments through the adjustment of monetary policy through the Fed funds rate is just not going to be an effective tool, but that's okay. We can talk a story like this. A credible threat He goes on to say, what has this got to do with monetary policy? Like gold, US dollars have value only to the extent that they are strictly limited in supply. But the US government has the technology called a printing press, or today it's an electronic equivalent that allows it to produce as many US dollars as it wishes at essentially no cost. By increasing the number of US dollars in circulation, or even by credibly threatening to do so. Credibly threatening to do so. The U.S. government can also reduce the value of dollars in terms of goods and services, which is equivalent to raising the prices in dollars of those goods and services. We conclude that under a paper money system, a determined government can always generate higher spending and hence positive inflation. The use of credible threats. They have refined this. They have gotten very, very good at it. And now, if you really want to understand how the credible threat theory operates and how it is that they are using their words, you really have to go through all the speeches over time. There is not a single speech that describes it. Phillips Jefferson comes close. His speeches do a very good job of talking about the communication, but he doesn't talk about why they do the communication. Other speeches talk about why they do it, but don't talk about how they're using the communications. Once you have pieced it all together, you really start to see the bigger picture that the Federal Reserve is communicating to the other central bankers. They don't communicate to the mainstream media in the same way that they communicate to the other central bankers. And once you start seeing these speeches, once you start breaking them down, once you have collected them the way that I have, there is no way that they can hide from you. I see it plain as day now. Being able to joke around about Donald Trump calling a suspension on that 90 days and then talking about it creating a massive euphoric moment within the market and laughing like how ultimately of a credible threat that would be, and then it happens less than 24 hours later. Like, tell me I'm not sitting on the pulse of this. This is exactly how it's going down. Nobody else has the credible threat theory dialed in. Nobody has economic theory dialed in as well as I do right now. I even had a guy telling me, it was just like, dude, you got to look at how China's trying to take over manufacturing and destroy the global nation's manufacturing capabilities around the world. And I'm like, yeah, I already did a video about that called 5 months ago called just that, China destroying global manufacturing. And I put that out 5 months ago. It was talking about the solar panels and how they're going to flood the markets with solar panels to destroy all the manufacturers out there by creating absolutely stupid, cheap products. And it's working. And by the time the dust settles, because they have an outstanding amount of production going out of their nation, when the dust settles and all the companies had failed because the prices had absolutely collapsed, the handful of them that are still standing will most likely be in China because they have the abundance. I don't know. We're going to find out. Like, I'm just guessing, but it seems to be going down that way. I mean, I don't know how it could be that, it can go any other way. All right, let's read this other super chat that we got going from Bobby. Thank you so much for the $4.99. What do you think the Fed is going to do at the next meeting, and what will their justification be? Okay, so good question, Bobby. I love the way you asked that. It's not about the rate adjustment. It's what is the justification and what direction are they going to go with the message that they give, because really it's all about the message that they give. The interest rate adjustment part of it is less critical. We've got to remember, like when they adjust interest rates on the Fed funds level, it takes 6 months to a year before that really starts to impact the economy. But when they give a message that goes along with that interest rate adjustment, that has an immediate impact on the economy. This is something that somebody kind of argued with earlier, and I just wanted to share. Let me see, which one was it? Was it this one? No, I think it was that first one. Yeah. Okay. So this is somebody was like, no, there's nobody out there. There's nobody listening to the Fed specific sentences or anything else. This is coming directly from Jefferson and how they use their communications in order to guide markets. Listen to this. Using textual analysis, high frequency asset price data, and high frequency central bank communication data, this research shows that investors' reactions to specific sentences communicated by the central bank are quickly incorporated into asset prices. They know what specific sentences to use. They've gone through all this textual analysis, high frequency asset price data. and high frequency central bank communication data. They've gone through all these data. They probably got AI programs that are saying, just say this. And the people will go like, oh crap, we got to go do that, right? And it's just like, I mean, how hard is it to anyway? Policymakers, let's see, know that their communications are likely to affect the course of short-term interest rates, other asset prices, and the associated economic outlook, resulting in an easing or tightening of financial conditions. So this is why I say you have to listen to the message, because right there, policymakers know that their communications, not the, like if it was just about the interest rate adjustment, then all they would have to do is just do the interest rate adjustment. And then they don't have to say anything, right? Just like they used to. They used to do that a long time ago. They didn't deliver a message. They didn't even talk. They didn't give you any kind of idea of what the hell they were talking about. In fact, Greenspan was like famously like kind of known for like being incredibly confusing. So anyway, policymakers know that their communications are likely to affect the course of short-term interest rates, other asset prices, and the associated economic outlook, resulting in an easing or tightening of financial conditions. So they know what specific sentences to use, and they know that what they deliver for the message will either have an easing or tightening condition. Right, because if it was just the interest rate adjustment, then they wouldn't have to communicate about it, causing an easing or tightening of the financial conditions. And so again, like it's not the direction, it's the communication about it, right? If they are pushing for like weakening economy, if they are pushing like recessionary pressure, then you're going to find that the direction of interest rates is going to be moving in a downward direction, right? You're going to find that people will start moving more into bond yields. They're going to start, or into bond prices are going to move up. They're going to start buying into bonds, right? I got to slow down. All right. They start buying into the bonds. That causes the yields to go down. Prices go up when they do this, right? And this is a position in which that people want to take if there's a recessionary pressure that is coming. Hold on, let me see if I can find it here. Is this what I was looking for? No. I'm sorry, guys. I was trying to go through these speeches here so I could show you an example of how it is that they communicate about that. Let me see. Was it in here? Ah, shit. I can't find it right now. Anyway, I lost my place in there. But they know that if they communicate in a particular direction with the easing or weakening, right? Let me see. What was it? Was it in Waller's? Shit, I can't find it right now. Sorry, guys. I got to do better organization of my files here so that I can really pull these things up in a much quicker and easier fashion for you guys. But ultimately, if they deliver a message that says, hey, we are going to do this interest rate adjustment because it is a weakening economy, recessionary pressure, you're going to find that the interest rates are generally going to fall. But if they do it as a general support for the economy, like saying, hey, we're just like, it's not like a recessionary pressure, there's no real problem with unemployment or something of that nature, and they're delivering an interest rate adjustment that is in the downward direction, that message that they give will probably cause the interest rates to rise. Now, there is a good example of this. If we just go back to 2003 and think about how it is that they were delivering a message of the interest rate adjustments going to zero due to a dot plot that said 7 interest rate cuts coming into the future throughout like 2024. And then all these economists came out and predicted like interest rates falling to zero, that the unemployment was going to like force them to do it, that they had no other choice, and that, they were well on their way and that they were screwed, right? There was all this communication about it. Well, what did you see happen with mortgage rates during that time? Right? The Fed hadn't done anything yet, right? They had not promised, right? They had communicated through the delivery of the dot plot prediction, which is the Federal Open Market Committee, giving a prediction on where they believe that interest rate adjustments would be going in the future if the conditions were to be remaining the same. In these conditions right now that we are experiencing, this is what it would be. The conditions never stay the same. The dot plot is literally a joke, right? I mean, it's like literally a joke because it predicts something that will never take place because the conditions never stay the same. And that's the problem with that dot plot. It gives you a good idea on what like these conditions are like for if it was to continue for the future, but it never stays the same. So by the time we get there, it's a whole new world. And then they say, hey, man, we can't adjust rates that way, right? So it's very much about the communication and how they do it. So what we saw at the end of 2023 was this delivery of this message that we were going into a weakening economy, and it started lowering the mortgage rates. You actually saw it happening. And then what took place soon as the Fed cut rates? Because they didn't cut it with a weakening economy in mind. They said that they were essentially doing it for general purposes of supporting the economy, but it wasn't because unemployment was rising. It wasn't because we were going into a recession, right? But they did this emergency rate cut, essentially, like a 0.5 point cut, right? Which freaked everybody out. And then what did you end up seeing when the message was delivered? That it wasn't anything crucial, right? Because like all the fear and anxiety that everybody had from this 0.5 point cut ended up getting backed up with 2 more rate cuts. And by the time those rate cuts were delivered, what was it going on with interest rates? They were ticking up. The exact opposite of what was happening at the end from the delivery of the message at the end of 2023. You see what's happened there? It's not a message being delivered every 20 minutes. It's not a message that's being delivered once a week. It's not a message that's being delivered once a month, right? It's a communication style that is going on, right? And that's what you have to listen to is this communication style. Go and look at how it is. Okay, here's something that you can take. Okay, like I can find this one right away. This is how the Federal Reserve is out there using the media attention right now in order to confuse the people, in order to direct the monetary policy. Confusing the people is definitely part of the game. To have many Fed officials come out and say different things so that people don't know exactly what it is that's being communicated. That right there is being stated here inside of this speech. Again, this is coming from Philip Jefferson. This speech is given May 13th, 2024, communicating about monetary policy. Remember, Philip Jefferson is a voting member of the FOMC. Okay, surely sometimes central bank communications can have unintended consequences. Let me give you 2 examples. First, there is always the risk that policymakers' statement about their economic outlook or the expected future path of the policy rate are interpreted by the public with a false sense of certainty. This is a problem, a false sense of certainty. They don't want you too certain. That's a problem. Let me read it again. There is always the risk that policymakers' statements about their economic outlook or their expected future path of the policy rate are interpreted by the public with a false sense of certainty. Everybody feels real good about it. They're okay, right? That's how you feel certain about the economy, about the outlook, everything else. That's a false sense of certainty. Why would they want you to feel uncertain? Here we go. For example, a data-dependent forward guidance announcement can be mistaken for a commitment to a fixed path of interest rates, right? Forward guidance announcement. That was what happened at the end of 2023. People took it for seriousness. They thought there was going to be all these rate cuts. They thought it was going to go to zero. They had an announcement that came with a mistake that was mistaken for a commitment to a fixed path. They weren't committed to that. When the interpretation is proven wrong down the road, it can create more volatility and uncertainty. Well, do you think they did that on purpose? How many people were certain of the economic outlook, that there was going to be all these interest rate cuts? And then down the road, boink, pull that right out from underneath their rug. They're not going to get all these interest rate cuts, right? When the interpretation is proven wrong down the road, it can create more volatility and uncertainty than if there had been no announcement. If they didn't say anything at all, you would have still been certain, right? See, they created the uncertainty. When it was interpreted wrong, they didn't fix the interpretation. They just allow you guys in the media and everybody else to just think whatever the hell they want so long as it's uncertain. Right? Goes on. This is why policymakers always make sure to stress data dependency for future path decisions. So they always have their out. Always have their out. Second, it is possible for the public, or it's possible that the public misinterprets the views of individual policymakers as a committee view. Remember, all the different Fed officials coming out giving their opinion. Go and look at it right now. Just type into like a Google search, Fed, official, whatever. Not Fed official. Just put like, Fed inflation newsfeed or something like that. And see how many different Fed officials you can find coming out talking and doing different interviews and all giving their different opinions. Second, it is possible that the public misinterprets the views of individual policymakers as a committee view. Right? They listen to one of them, they think that's what the Fed's saying. They listen to all these people, they get very confused. The potential for misinterpretation is especially acute when many policymakers speak at the same time and disagree with each other. So they come out, disagree with each other. This is how they create the situation that is a diversity of viewpoints among policymakers lends itself to stimulating debates and ultimately better policy. But in such situations, more communication could increase rather than reduce uncertainty about policy. See, they want the uncertainty so they can communicate about it. If you were certain, then they wouldn't be able to communicate about it. They can say whatever they want. If you're certain, you're like, I'm pretty certain. I don't care. I don't even hear you. But if you're uncertain, you'll hang on every word. Let's read this. What do we got here? We got Bobby. What do you think about the Fed's next bill? Okay, that's right. We already went through that. Sorry, guys. Okay. Gimpy Gladly, $5. Holy hell, UE, catching up from the beginning and love the intro of this one. I think it's a keeper. Yeah, it's going to do all right, isn't it? Thank you, man. I appreciate it. Wow, look at all these comments. Here we go. There's the other one. We got that dude over there, O2. Thank you for the $5 Canadian. A few guys. We're chatting about tariffs in the lunchroom. I'm new at work, and I mentioned that the credible threats, you should have seen the looks I got. Ha ha. Right? And that's what I loved about it. When I opened up when I was looking at the news feed this morning, and I opened up at one point and saw that there was this 90-day suspension that was actually put down on it, I'm thinking, no way. Once you see it, man, it's just like that is definitely like the sign of all signs to me that my theories on what it is that's going down right now are more accurate than I could ever have possibly imagined. Like, it's just, I cannot see it any other way, and it doesn't seem to be going down any other way. And I know it sounds like cocky and arrogant to say it like that, but ultimately I can prove it through all these different channels of how it is that I have found this information. It's not like I'm just inventing it out of thin air or just imagining it. It was like, this is how it's going down. All right. Dude sells lumber and he knows more than money managers collapse back door. Okay. When do you think collapse will happen? The collapse is happening. See, this is where I think a lot of times like people get confused about like, when is it that the collapse is going to happen? It's underway. It's now. It's taking place. You have to understand like the idea of an economy that can continue on with debt issuance as the only form of new money that comes in can only go on for so long. The debt issuance will eventually fail. Like they won't be able to do it anymore. And the thing is that it's an unsustainable debt path. And that's what we're on right now. So the Fed has said it. The government doesn't seem to want to admit it, not to anybody, but the Federal Reserve has like already communicated many times. They're not like, for however they are to figure out this, I don't know, because to me at this point, it's just like it's a lost cause. They seem to be under the impression that the government is not on an unsustainable debt yet. They're on an unsustainable debt path, meaning that they cannot continue down this road without ultimate failure. Well, duh, right? You can say that from the day that you take out the first debt, right? I mean, the moment that you start taking out debt, you're on an unsustainable debt path if you continue to take out debt. So that's kind of like, Yeah, that's kind of like a duh statement, right? But the point being is that they're basically coming up with an idea, or trying to come up with an idea in which that they cannot have they're coming up with an idea in which that they do not have to buy the US Treasury in order to expand the money supply. That right there is what I think is probably the biggest issue in what it is that they are trying to figure out right now, especially when it comes to the ideas of central bank digital currencies and stable coins and all the rest of the stuff that people have, like, this idea about, XRP seems to be a really big one when I talk about, central bank digital currencies and stable coins. I have no idea what it is that they plan on doing into the future. I do know that the Federal Reserve has communicated many times talking about stablecoins and how it is that the government can regulate stablecoins. They can conduct their monetary policy as normal. If the stablecoin is being backed by the dollar, their monetary policy will transfer right into the stablecoin. So, how this all goes down is beyond me. The only thing I know is that they have communicated this a very long time ago, and I go all the way back to that Ben Bernanke speech that I originally started with, and he really has this to say: the Fed can inject money into the economy in still other ways. For example, the Fed has the authority to buy foreign government debt as well as domestic government debt. Potentially, this class of asset offers a huge scope for the Fed operations, as the quantity of foreign assets eligible for purchase by the Fed is several times the stock of U.S. government debt. If they are eligible to purchase foreign asset, what are they purchasing it with? What does the Federal Reserve have other than their liabilities, those Federal Reserve notes, U.S. dollars? What in the hell are they going to be buying with that? Foreign assets? So they're going to take like the debt of Italy and put it on the balance sheet? And then now we have money that's being backed by a, a, a essentially a financial asset of Italy. Is that how that works? Like, how in the world is something like that supposed to go down? I have no idea, but yet I see it from a speech that was given over 20 years ago, that they knew that the unsustainable debt path was going to happen, where they could not continue to buy U.S. Treasury debt. And he says right here, the Fed can still inject money in other ways. They can buy up that of foreign assets, foreign government debt. How many people tell you that? How many people have ever communicated this? This is the only place I really have ever seen this. Like, I've tried to research it, and maybe it's really just plain sight somewhere and I'm just missing it. But I've done a lot of research and I've never heard this communicated everywhere, anywhere, at any time. So you think about it, if they move into a digital asset or digital currency, a stable coin, and now you have like essentially a technology that can then limit where that currency goes. You see what I'm saying? Like, you can say, well, it can't leave the country. It can't purchase but these items, or maybe it's not allowed to purchase those items. I mean, like, the mind can spin on the tax control, tracing, all the other stuff that comes with it. But here I'm thinking, how in the world is the Federal Reserve going to buy the debt of a foreign nation, put that on their balance sheet, and inject money into the system, and have this money just like everywhere around the world, and it's being backed by a foreign nation? This to me seems a very dangerous road to go down, right? Like, I mean, I can't even begin to like imagine what this would end up looking like. But here the possibility is. And like I said, if you have a central bank digital currency, or at least a stable coin, you have the technology to then limit the direction in which it goes, well, then you might be able to pull that kind of thing off. All right. Okay, let me back it up here a little bit. Who's winning the Masters this weekend? What's the Masters? All right. You could take all the billionaires' money and it would fund the government. It would fund the government for 6 months. Taxing the rich does nothing at this point. Where my capitalist dogs at? All right, this goes down here to the Jay. Thank you so much for the $5. I came to the stream late, so I'm behind, but I woke up and saw the change this morning. The first thing I thought was, he's absolutely right. Thank you, Jay. I really appreciate it. Thank you very much for the $5. That's right. We are nailing it here. We are nailing it, breaking down this understanding of how it is that they are using their words, using the monetary policy or using the propaganda to conduct their monetary policy. And then now you can see it almost plain as day. Like, the more we do this, I mean, I don't even know where to go next with this. Not unusual. All right. What would you invest in right now? I kind of talk about what I invest in. I don't invest in any kind of shot. Like, I don't take a big chunk into anything. I dollar cost average into everything I do. I have a lot of directions in which that I deploy money. I have a 401k. I have my own like online stock. Like, I buy through Cash App. I buy stocks myself. I buy into cryptocurrencies. I buy a little bit of silver. I have my house that I am living in, so that's kind of like my real estate portion of things. I'm everywhere, right? And I do a little bit all the time. And recently, over the last few months, I did sell some stock, not because I thought that the stock market was, a horrible place to be, but it's because I wanted to get out of debt. So over the last couple of months, I have not deployed any money in any other direction other than paying off my debt, which I am hoping to be done by the end of the month with. So that's what I've been doing right now. And I suggest that other people kind of look to what it is that they need to be positioned in. I personally think that having it in many different directions is a good way to go for stability, but it's probably never going to make you outstandingly rich. If you want to be outstandingly rich, you have to put everything into one thing, right? And if you're going to put everything into one thing, you might want to be yourself. So if you had a bunch of money that you were going to put into anything, I would probably put it into you to figure out what it is that you need to do in order to generate even more money. So starting a business, doing something of that nature. Financial advice, I don't give it. That's my financial advice. Like, whatever I just said, that's it, man, because that's what I do. That's what I do, and that's the only thing I can suggest. And I don't even suggest that to everybody. I just suggest it to people who think that it might work for them. There's other people. If you're 18 or if you're 80, there's going to be different decisions that you need to make in order to get through this. Right? And understanding, like, a lot of the position that we are now facing is literally generations old. Like, it takes a long time to remove the manufacturing of a country. Like, sometimes it's, a lot faster and easier than others, but for the most part, it's a slow grind that takes place. 40s, 50s, 60s, 70s, getting into the 80s. It didn't look so good by the 90s. People were like, where the hell is it all going? It's all gone. And now here we are saying, oh, we're going to try and bring it back. I mean, you know how long ago that was when we had a good, powerful manufacturing state? And it's not like, and here's an argument that I think a lot of people kind of misunderstand when I say this, is that it's not a matter of bringing jobs back. You can bring plenty of jobs back. There's going to be all kind of opportunities to have jobs. The problem is the trade deficit. And I get it. Like, the whole idea with the tariffs and everything is to try and solve the trade deficit. It's not going to happen. You know how outstandingly massive it is? You can have a great, wonderful sparking of jobs that come to this nation, and it can be like really good, strong jobs, good manufacturing jobs. You're going to have jobs that produce something that compete against other people who are producing those same things, or are essentially going to, unless you figure out something that you can produce, unless you can figure out something you can produce that nobody else is producing, you're probably going to have to compete against other people who are producing the same thing a hell of a lot cheaper than you are. So you're not going to be selling your product to the world. How do you get new money in? Right? The new money comes from production. It comes from, like, literally charity. It comes from, like, war effort. You can go and steal it, right? Or you can borrow the hell out of it. And we are in the borrow the hell out of it position. We can't, like, and once you have elevated your standard of living because you borrowed that existence, and you think about it, you borrow money to buy a house expensive. I know, I got a $500,000 house here. And it's not even it's not a $500,000 house. You take this house anywhere else in the country, it'd be $200,000 house, right? But I live in one of the most expensive places in the entire nation to buy a house because I think it's a beautiful place to be, and I have to pay dearly for it, right? Let's go read the super chat. I'm just kind of going off here. Will, thank you so much for the $2. We need the fuzzy dice to make a comeback. Where are my... Oh God, guys, I don't want to bail on the stream right now, but I have Fuzzy Dice over there sitting in the Suburban. All right. Thank you so much for the $2. And I thank everybody for the support for the channel. You guys are great. We got 798 people watching, which is just incredible. If everybody ran out right now, everybody went down and hit the like button right away, everybody did it quickly, the YouTube algorithm will love that. They'll see a bunch of engagements and they'll run out there and grab a bunch more people to come into this live stream. Let's get 2,000 people up in here. Let's see if you can go and find a bunch of friends and let's break this stuff down. Let's get some questions answered. I know a lot of people have questions about the neutral interest rate. We can talk about that. We can talk about the flexible average inflation targeting. I can show you where that's all taking place. I can break anything down. If anybody has any questions, let's do this. Yeah. Living on YouTube, not a proverb. Wise man once said, patience is divine, but never pay full price for late pizza. Yeah, no kidding. Thank you, Will. All right, I think over 7+ trillion at better rates trumps other concern. My TSLA was up. My Tesla was up 22% today. Yeah. See, it's stuff like that. That's what I love. I mean, it's just like, to me, I think that that's just absolutely amazing to have a position in which that you could see that, like, people to jump in Tesla. I actually had somebody, I think somebody asked me that yesterday. I was joking around with them because, they're kind of somewhat of the liberal minded. I don't know if they're like, anyway, I was just like joking around, I was just like, yeah, why don't you buy Tesla? And I think, that would have been funny if they did and got a 22% score on it. Anyway. Okay, let's see here. Let's talk about when you think miles driven in the U.S. will be. What? All right. Oh, Christian from the book of Ninja Turtle. Okay, Foxconn China was in Japan today pitching building their hybrid EV cars and all Nissan production. Do you think they will change the rate next month? I mean, I don't know. I don't think about the interest rate adjustment. I really honestly don't, guys. Like, I get that question all the time. What are they going to do with the interest rate adjustment? And I just don't think of it. What I am listening for is whether or not they are communicating a weak economy, like we're going into recession and that's why they are doing the adjustment, or if it's general support. Or if they do no interest rate adjustment, why they don't do an interest rate adjustment. What is it that they are seeing, right? Are they seeing the inflationary pressures and not worried about unemployment rising and not worried about the recessionary pressures? Well, then you can probably generally guess that interest rates are going to rise after that. But if they're like, oh no, we think that there's, recession coming, but we're really cautious right now that the inflation might be, too much, so we're going to hold steady, but we do see, recessionary pressures coming and ready to fire the trigger at any given time, and that's the message they deliver, interest rates will go down. They can stay still, they can move, it doesn't matter, right? That's the point. That's why I keep trying to deliver this idea. This message is that the interest rate adjustment is not the effective tool. It doesn't matter. We have to listen for the message that comes with it because that is the tool. That's what's going to change the interest rates. If you want a better rate on mortgages, listen for a weakening economy. If it sounds like there's recessionary pressures that are building, then most likely what you are going to find is that the interest rates are going to start coming down. And I know that sounds weird, right? But that's what you're going to end up finding because think about what ended up taking place at the end of 2023. We saw it exactly just like that. People thought for sure that the Fed was going to zero because of interest rate or of emergency interest rate cuts due to unemployment getting out of control. All kinds of messages were being delivered. They had the dot plot showing 7 interest rate cuts, and all these people said for sure that it was going to happen. They sat still for a very long time. Interest rates fell. The moment that they cut rates, interest rates rose. Why? Because they delivered the message. Well, at first it was a dramatic message of a 0.5 rate point cut, but then the following two are delivered with messages that says, hey, this is just a benign effort that we're just trying to generally support the economy. We don't see unemployment rising and we don't see any kind of recessionary pressures building. But they cut those two rates and what did we see? We saw rates rising after that. So again, it doesn't matter what they do with the interest rate adjustments. I mean, it does, but it takes 6 months to a year down the road. So if you really want to know what's going to happen, listen to the communication that is being delivered with the interest rate, either adjustment or not. They may not even do an adjustment, right? But they're going to deliver a message with it. That message is the important part. I cannot stress that enough. Everything else doesn't really matter. Listen, like here, let's go back to one of these speeches because I know you guys love these things. Right? And this is what it says. It says here, expectations become a focal point in academic and policy circles with the emergence of new Keynesian models in the 1990s as a framework for monetary policy. In these models, aligning the expectation of decision makers in the private sector with those of the policy makers produce superior economic outcomes. Mike Woodford, one of the developers of the new Keynesian model, put it this way: not only do expectations about policy matter, but very little else matters. So when you ask the question, what are they going to do with the interest rates going into the future? I have no idea, right? I have no idea what they're going to do with them. I am listening to the communication, and you hear a lot of pressure of recession, but what I hear coming from the Fed is inflation. Inflation. We're worried about inflation. Tariffs causing inflation. We don't know. We're data dependent on the possibilities of inflation. That's what the Fed is communicating. I see it all over the place. And their favorite thing to use is the word uncertainty. Why? Because it creates better policy outcomes, right? If they have the people very uncertain, then they can deliver a message that makes them certain in a particular direction. If you were certain and they tried to deliver you a message, you'd be like, I'm certain. I don't care. Right? You can deliver any message you want. I'm certain about what I got going on. But if you're uncertain, then you would listen to the message. It's just the way they do it. So they want uncertainty. They like to keep it that way. And so again, like as we get closer and closer to those meetings, just listen to the chatter about whether or not we're in a recession, or if the Federal Reserve is concerned about a recession or unemployment rising. If they're not worried about if they're not worried about a recession or unemployment rising, then you can imagine whatever communication that they deliver is probably going to have an elevated interest rate going with it. Right? If they deliver one that has recessionary scare or unemployment rising scare, you'll probably see the interest rates fall. That communication is the important part. They might do a rate adjustment too. It doesn't matter. That part, inconsequential. 6 months down the road, a year, great. Okay, we can talk about an interest rate adjustment affecting something down the road. But as far as like the decision making that you want to do, as far as instantaneous kind of communication, or good Lord, I got to slow down. The information that you are getting to use that instantaneously within the markets to try and find like a position inside of an investment, or to find the best time to buy a house, like whether or not you think that interest rates are going to go down into the future and stuff like that. This is very difficult. Like, it's difficult for me to answer these questions, not because I don't have an idea on where interest rates are going to go. It's because what you're trying to do is you have an expectation of an outcome, and I try to alleviate expectations out there, right? Try to say, I don't have like an expectation of making money, right? My expectation is to try and figure out what it is that I am thinking is taking place within the economy. Like, I can do predictions. My expectations, I guess, can be somewhat like, synonymous with predictions or, belief of outcomes or whatever. But again, like, I believe an expectation means that if it doesn't go that way, then your life is affected by that. Right? My life isn't. Like, I look at the economy and then try to figure out what it is I need to do with what it is that I'm seeing out there. So when you put like investments or something, you have an expectation. I just dropped $10,000 into this particular stock. If it doesn't come back, it's going to affect me very bigly, right? This is going to be a horrible moment if I lose all this money. That's a huge expectation. But if you're dollar cost averaging and somebody says the stock market crashed, and I was like, well, yeah, I know. I mean, it was dollar cost averaging anyway, and I wasn't really thinking about it. It'll come back at some point, whatever. I'm just going to keep dollar cost averaging. You see, your expectations is low, And that's where I try to keep it, is a low expectation. By elevating your expectation, you're kind of setting yourself up, right? What you do is, and this is funny, what you end up doing by elevating your expectation, what you are doing is you're creating importance. By creating importance, what you're doing is then creating potential. You can't excess potential is what's happening from that. So this excess potential then needs to be balanced out, because the universe will always balance out this excess potential. So if you have a bunch of importance that is put upon it, I drop $10,000 in there, and if it doesn't go up, I'm going to lose everything I got in my entire life. Well, guess what? You might, right? Because you put that much importance on it. But if you dollar cost average $10,000 into it, and somebody says the stock market's crashing, and you're like, well, I kind of put it in there with the expectation that it was probably not going to do very well anyway, so my expectations were like essentially low or non-existent. And then if it does do well, it does great. Like, you just keep it in a, like, I assume that most investors would lose their mind trying to think that way, because they have so much, like, they're reading data and they're doing all this other stuff. Me, like, that's why I'm an economist and not an investor, right? Being an economist says, hey, I can take a very calm approach to it and just look at it, and whatever direction it just goes, because an investor has committed themselves to a particular direction. And that's where I'm very free in it, I guess. All right, enough with that. Let's move on. Whoa, look at all these comments. You guys are awesome. 718 people with 399 likes. Go keep hitting that like button. I appreciate everybody being up in here. Why do they like chaos? Because it separates us as people. Well, I think chaos and fear and uncertainty definitely keeps the people from uniting. Anytime that you ever have, like, the negative feelings of low emotions like fear, uncertainty, greed, hate, stuff like that, all those emotions are very hard to then have like a joining effort that comes in. So if they can keep you in this fear-based consciousness, then it's much easier to manipulate and control, because everybody wants to move out of that. They don't want to be in fear, they don't want to be there, but they naturally fall back into it because they want to feel like the protection. So if they're feeling the fear, or they see the fear, and then somebody says, hey man, I can show you a way out of this, then they gravitate towards it. So they end up controlled by this fear and uncertainty, and if they keep them in this position, then it's very easy to manipulate and control them by just simply leading them down a path of, like, hopefully a better way, right? TDS is easily cured with 5x5 back squats and short test. Stephen, there is hope for you. Yeah, TDS, is that Trump derangement syndrome crap, which is like basically a cop-out for somebody who doesn't really, like, take any kind of criticism of the Trump administration seriously? Because I've been accused of that so many times, and I'm thinking to myself, what a horrible way to argue a point to somebody, is to accuse them of something of such nature. Anyhow, what do you see as the future of oil or natural gas production price in the world? Will the U.S. ramp up production? I don't see how that's possible without an increase in oil price. Yeah, I kind of agree with that. I mean, I hear all these people, we need to drill, and I'm thinking, why? I mean, it's like at $60 a barrel. What good is that going to do? Like, you can buy all the oil you want. I mean, what I don't, like, why is there such a spread between the price of gasoline and a barrel of oil, right? The refinement of it seems to have really exploded in cost, if it really costs that much now. I mean, I remember paying $5 a gallon when oil was $150 a barrel back in like 2005. Right? I don't know how many people remember that, but back in 2005, during Bush administration, right? Wasn't that then? Yeah. All right, it was Bush administration, and I remember it was shortly after he had given a stimulus check back then. I don't know if people remember that. It was like the economy was crashing back then. It wasn't doing very well. And he had given out a stimulus check then, and I was just like, well, so good, this stimulus check, and went right into buying gasoline, because gasoline went up to like $5 a barrel right around then, or $5 a gallon. Yeah. Anyway, and that was back in 2005. 20 years ago. All right, people are so angry because they need God and want government to be God. Actually, Kirk, I can kind of agree with that. All right, Dr. Joe Champion made gold and silver in the lab. All right, anytime opinion on the dollar liquidity shortage. I'm not sure what that one is. Anytime on dollar liquidity shortage. I see. Any time frame on it, like when that's gonna happen? I don't know. I don't even think the Federal Reserve knows. Like I think that they're just prepared for a moment when which it exists. Like I don't even know. It's like probably like a tipping point. Like it was just like, is it there yet? Is it there yet? Oh, here we are. There it is. Right? It's like when defaults start to rise and credit markets start to freeze up. I couldn't tell you when. And again, I think a lot of it also has to do with, again, like the confidence game that's with it. If you're confident and you keep taking out more debts or able to, continue to acquire the dollars to pay your debts, then everything will continue onward. But the moment that people start to hoard it and say, oh no, give me my dollars, and they start pulling it out of the economy, then all of a sudden people aren't able to find enough to pay the debts. And this is where you start finding the liquidity issues happening. Let's cruise down here. Dude, we are in a dollar liquidity shortage right now. Well, if that was really the case, then what you would end up finding is that if there was a real dollar liquidity shortage, like, like a bad one, interest rates would be jacked up way high, credit markets would be frozen. You would have people who were like panicking in the streets because they couldn't get a loan. That's not taken place yet, right? Now, there are restrictions, there's issues, there's hiccups that are happening. But as far as dollar liquidity shortage that is happening, I'm not seeing it in like I'm not even seeing it to the issues that they were having back in like 2019, right? Before they fired up the repo facilities. So is the potential for one is there, but I don't see it actually occurring like as a result inside of the banking structures, right? Inside of the systems. All right, Jay, thank you very much for the $5. I remember watching one of your earlier streams thinking you were too on the right two on the right for me. TDS. I haven't heard you mention Trump in a while. Um, that's because like I don't believe that it's I just don't believe that it's a political issue when you can find how this monetary policy spans over administrations. Like there's things that are going on during the administrations that are interacting. Like, they're definitely in communications. There's stuff that's happening there, but as far as like the monetary policy being geared to protect or hurt a particular administration, like acting politically, I can't find that anywhere. I cannot find that anywhere. And so to try and incorporate that into this monetary policy is literally trying to shove a square into a round hole. Right? It just doesn't work. It's not going to go. And so when you finally look at it in this fashion, it's like, okay, the Federal Reserve has a particular agenda of their own. Like this is what they need for their monetary policy in order for it to operate. And once you see that it's not so much about the interest rate adjustment, but the communication about it. See, this is really where breaking these speeches down and it starts to make a whole lot more sense. Um, and and that's where I think like the most confusing part of it is, right? Because you see all this stuff that happens. Like Donald Trump screams so loud, so much, and he has so many people uptight. Like this is how bad it is. This is how like the derangement. This is how bad it gets. I actually had a conversation with an old man today who was so mad at Donald Trump. Like this is how crazy. He said, I showed him. I said, dude, look, the stock market, like the Dow went up like 3 grand, right? Or 3 grand, went up 3,000 points today. I said, check it out, man. And he was like, oh, so what? And I'm like, doesn't that make you happy? I mean, you're kind of old. You got stocks. Like, wouldn't you be happy that, the stock market just went up like 3,000 points or on the Dow? And he says, I hope it crashes and prove Trump to be an asshole. And I'm like, what? Like, you're not serious, right? You didn't just say that. Like, you don't really honestly want the stock market to crash so that Donald Trump can be hurt, or that people would look at him negatively or think of badly of him. You wouldn't want yourself to be damaged in order to put this impression, to put this image on him, right? Like this is what you want. And he was ultimately saying, yeah, that's what I want to do. And I'm like, whoa, oh man, now people have really lost their mind, right? This is like absolutely lost your mind. But he literally, that's what he said. And he was just mad from, being all worked up from reading these articles or whatever. And that's why I just like, and I'm like, oh man, that's horrible, give the deranged reason to hate Trump and Musk, Democrat media for the idiots. Whatever. I mean, if people want to fall for all this crap that Trump is pulling off, and you don't want to see the credible threat theory for what it is and how it is that he's playing the people right now like a fiddle, I mean, that's up to you, right? And now, I mean, I'm not into Democrats. I'm not into Republicans. I'm into libertarian, right? I'm a constitutionalist libertarian. I believe in my belief of personal freedoms. I believe in the constitutional rights. I believe in, sound money. These are the things that I believe, but I also understand that we are not living in an existence in which that I can get other people to think the way I think. And when I start talking and I start getting over target and I start getting hit from both sides, calling me whatever names they want, accusing me of being on the other side of the fence, I know I'm over target. And I know it's difficult for most people to recognize what it is to see a libertarian in action, right? But that's ultimately what I am. And I don't even want to call myself that. I would like to think of myself as that. I'm not even that. I would like to think of myself as that. And so sometimes I wonder if I'm even that. I just think, I don't care anymore about your politics. I don't care anymore. It doesn't mean anything to me. It doesn't mean anything to me at all. Go have it. You guys could go fight and argue and bitch and complain about it all day long. Means nothing to me. I do not get worked up. I don't care about it. I am not somebody who's going to be like, man, you got to listen to this side and they're right and those people are wrong or all the other stuff. It was just like, whatever. To me, that doesn't make any difference. Not in my life, right? What I have to do is make decisions based on what it is that I see going on out there. And politics be damned, it's not important to me. The world's largest oil basin is the Permian. What does this tell us? All right, good luck at Walmart 3 months from now, MAGA. Humanity and truth before politics. Trump looked like he is fading, gone out like he's Reagan or ending. Okay. Dude, what do you expect Trump to fix everything in 10 damn minutes? Just calm down. Okay, so go and believe for yourself what it is that you think that Trump is going to do from your belief or your perspective or whatever, man. I don't know what it is that you have researched, but to me, Trump is playing a game of artistic fantasies, pure imagination. I see it for real. I see it for real in this monetary policy. I see him conducting it. I see him pushing the inflation expectation ever higher so that they can raise the neutral interest rate. It was a major problem for them that they were communicating back in 2018. Trump isn't going to fix anything. What is he going to fix? There's nothing that he can do. There is nothing that he can do in 4 years that's going to fix anything. You can't even do this in 40 years. You know how many generations of people who have to live in pain and misery and suffering in order to have a lower standard of living to compete against the other people out there who are living on the ground? Ain't nothing Trump is going to do except for put a boot on the face of humanity in order to create that. Trump isn't going to solve anything, man. Take control of your own economy. Don't rely on him. Don't rely on Biden. Don't rely on Trump. Don't rely on anything that's going on out there except for your own understanding of this economy. Anybody else who is suffering under the guidance of somebody else is going to suffer in pain and misery as a result of it. Take control of your own economy. That's the only thing I can ever offer to you. I mean, I constantly come out here and preach that to you. All right. I share the links. I share the where to go and get the information to internalize it yourself. Trump ain't going to fix anything. Ain't nobody going to fix anything. There is nobody coming. All right. There is literally nobody coming. There is no magic man out there. There is nobody who's going to show up. All right. I don't even care about understanding the economy. I just want to make money. You're going to have to understand the economy. Actually, you don't. What you have to understand is that the money is energy just like anything else. All right? Money is energy just like anything else, and you have to be in flow of money. You have to be in the position in which that money can come to you, and it's not that difficult to do, right? Most people put it in their mind that they have to chase the money, and when they chase it, it runs. But if you put yourself in a position of money and just to receive money, money just naturally flows to you if you're in the energy of receiving money. But you have to understand that. Most people don't. They look for something out there. They're like, no, I have a need to look at this video in order for it to tell me how to make money. But ultimately, the money was right there the whole time if they were just be in the energy of receiving it. It's like literally looking for something you already have. And I know that's difficult for a lot of people to understand, but it's how it is. Money is just an energy like anything else. You are already got the energy within you. You are already feeling it. You just don't know it. Instead, you've put into your view this idea that I have to go out and find it, but it's right there. Right? Money flies all over the place. It's everywhere. You just have to know how to reach out there and grab it. Yeah. And it's not that hard once you recognize learn how to get $1. Learn how to make $1 off the internet. If you can do that, you can make 2. You can make 4. You can make 8. You see what I'm getting at? Safe to meeting. Yeah, I know. I need one. All right. One guy can tank you in one afternoon. Don't follow the man, follow the money. You can't invest in that environment. What could Trump fix? Lower national debt, maybe. Push for higher tax. Okay, all this delusional talk. I mean, I'm not trying to say delusion. I'm not saying that he can't do those things. I'm not saying he can't bring manufacturing back. I'm not saying that he can't fulfill all the promises that he had. What I am getting at is that he's not going to be able to do it in a way that is going to reverse what's going on. What we have is an underlying economic force of diving into luxuries, which has created a situation of inequality that cannot be repaired. It can only fail. That's it. That's the only direction in which it can go. The idea that you can repair it is not going to happen. You can't repair this situation. In order to repair it, you would have to have people live without enjoying any new luxuries, without enjoying anything new actually at all, like no new cars, no new TVs, no new anything. Wear the same old dingy clothes, repair everything that you possibly can, work really, really, really hard to pay off as much debt as possible. Do that for generations upon generations, because after you get done paying off the debt, you're going to have to be a saver for a while, because you're going to have to be in the same position that you were in that the other people are doing right now. There's no fixing this. There's only understanding that there's the production of new money. The production of new money comes from debt issuance of U.S. treasuries. In order for that to happen, we have to consume the products of the world, so the world will buy those U.S. treasuries. What we produce here in the United States is a consumer. That is it. Anything, any other direction, and it will fail. Right? Once the abundance is gone, it's failure. It's over. Can't debt just be deleted? No. Debt is only real as the violence to collect it. Okay, think about everybody who holds a U.S. Treasury debt. That's all the retirement funds, all the insurance companies, all the banking systems, everybody. And all of a sudden you're going to say, it's gone? That's all the money. That's it. There's no money. Right? You're still going to owe, because the dollars are actually going to disappear before all the debt does. And you're still going to end up owing. You can't just alleviate the debt. Everybody's retirement funds, everybody's savings, every insurance company, every company, bank, country, everything would essentially be without money or use. They would be barbaric trading of gold and silver and bartering and pain and suffering, misery and warlords. All right. You can't just alleviate you can't just make an imaginary go away. It doesn't work like that. All right. Have you ever thought about protecting your wealth with base metals, copper, nickel, zinc? In some situations, I see these being potentially much better investments than precious metals. I would give it consideration, but I don't know if I would necessarily go all in. Now, there is something to say for like the crazy lunatic who gets all nickels, because really, if you think about it, or even pennies, like copper pennies, if you were to put all your money into like old nickels, copper pennies, and had every single bit of your wealth in just those two forms of currency, those old nickels and copper pennies, old pennies, then you are essentially protected regardless of what happens out there, because you have the metal value, which actually exceeds the face value. So you have more money in metal than you would in dollar value from the face value of those coins. So regardless of what happens out there, if all hell breaks loose, then you got all this metal, which is actually more value than the money you had anyway. So it's like, it'll be really valuable then. And then if, everything's cool, just spend it. Just spend it, right? So like, it's like a no lose by doing that. So there is an argument for it, but dang, think about how much you would have to have in nickels and dimes, or not nickels and dimes, but nickels and pennies. All right. Southpod, thank you very much for the $5 Canadian. Hell. Do you think they will confiscate the retirement funds people have saved to save Social Security? Like confiscate the 401ks or something like that nature? I don't know. That seems like, I think that would be a bit far off. Confiscating something like that or taking possession of it, unless they were like failing or something like that, and would have to like assume it so that people's retirements would keep paying, or like, I don't know, like something of that nature. I don't know why people would be accepting. And people were like, well, they would be forced to accept it. Well, not really. People kind of lose their minds when you start messing with their money. I don't know why people would just be accepting of the government confiscating their 401k unless it was like failing and they were trying to like use it as a guise of protecting it. But unless it was going down something like that, I think the people would just absolutely lose their mind and riot, if that was to go down. All Nighter says, debasement of the dollar creates the same effect. You can't eat gold. I learned to can and bought my equipment. If I don't have anything, I could offer a service. There you go. See, now that's something that you can even use right now. You don't have to wait for end times. Like, just meet people who like to hunt and fish. And like, especially if you find somebody who really likes to fish but don't like to eat fish, those are the close friends. Those are the ones you want to, it's like you want to buddy up to, because they'll bring you all kinds of fish and they don't even want anything back. So you just get it for free, right? You just tell them, just bring me all the fish you want, man. You just catch them all day long and I'll take everything, 100 pounds, whatever. And so those are the type of people you want to really kind of buddy up to. Or you just find people who are like, no, I want to fish, but I don't know how to can. And it's like, well, give me all the fish. I will can it. My jars, my lids, my rings, my work of canning it all, and I'll give you back half the fish, right? And then generally you ask for the jars back, right? So you get but that's kind of how like the neighborly rule of canning goes, is that the person who caught or gathered up whatever it is, and you're going to, offer to give it to the person who's going to can it, they're going to can it with their equipment, their stuff, right, their supplies, and then give you back half of it. And you can find people all over the place who are totally down for that. And it was just like all this work of cutting up this fish and canning it and processing it and doing all that other stuff, and to have somebody else do that and give them back half, they're totally down. They'll just keep catching fish all day long to have that. Wow, look at all these super chats coming through. Okay, yeah, love it, guys. Thank you so much for being out here tonight. We got 719 people watching with 439 likes, $54.96 in super chats. Thank you so much for being so supportive of the channel, guys. Would you buy a share in 20M house in Nantucket, a $20 million house? Something like that? The rich get richer. Would you buy a share? Huh, that would be interesting. I guess it would depend on, on the location of it, but man, that's a lot of money. All right. Tyrant, thank you so much for the $10. Here's some money out of thin air for your money energy. Also, China has more gold than any other country. The US will not let this next monetary phase go back to gold. It will be Bitcoin. I don't even think it'll be Bitcoin. I don't think it'll be gold or Bitcoin. And ultimately, if it is, we're going to suffer in pain and misery and poverty because of it. So it's not going to be something that the United States would push for, that's for sure. Right. And the only way that they would push for it is if they could figure out a way that they could get the new money into themselves. Because the most industrious nation is going to produce, sell their product, and import all the gold or Bitcoin, hoard it for themselves, depriving the rest of the nations of gold and silver and Bitcoin or whatever it is that they are using. It's a fixed currency like gold or silver or Bitcoin. If that was to take place, then that industrious nation would hoard it all for themselves, and the rest of the people would suffer in pain and misery because of it. And then there would be an equilibrium that would take place because of that. That's what the United States did not go through when Nixon severed us from the gold standard. It was essentially at the point that the Cantillon effect was kicking in, redistribution of wealth was supposed to happen. All that gold was going to get redistributed back out there to the rest of the world. Nixon said, no, thank you. We'll just give you U.S. treasuries instead, and we'll keep the gold. Now, granted, other nations can still produce and acquire gold like China is doing and has done, right? And if it did go back to a failure of fiat currency, gold and silver would essentially be it, Bitcoin to a lesser extent. So in an all-out collapse of the dollar system, absolutely, I think gold and silver and Bitcoin would definitely move to the top, as there would be no other form of currency to use. It would just, that was it. There's nothing else out there that would be acceptable. And even Bitcoin would be a much lesser extent than gold and silver, because gold and silver are proven. I mean, the only reason why we use dollars is because people had no other choice, and they wanted to eat, they wanted to do transactions, so they accepted the dollar. They didn't really want to. All right. Thank you guys for all this, for all the super chats and great comments and everything. All right, let me cruise down here a little ways. Give me back my goddamn charge. Yeah, that's kind of the way they feel sometimes too. All right, I did similar with people who had full fruit trees in their yards, agreed to collect and harvest for keeping half for myself, all-nighter. Untuned, please misspell that for the algo. Yes, please do. Thanks. Yeah, a lot of times I think people kind of need to realize that the algorithm reads through all the comments. It listens to everything I say. It's everything. Like when I cuss, I really shouldn't cuss. Some of the things that I say, like there's a couple of key words that I have found that the algorithm absolutely hates, so I try not to use them. Cuss words, right, are a big one. Certain, like, just certain phrases, that are obviously triggering phrases or something like that. Like, I mean, obviously, free to speak, however, but really, if you want to be here and help out the uneducated economists and get this information spread around and have more people join in, kind of help out and just kind of behave in the comment section, that way All Nighter doesn't have to work so hard. All Nighter and Brody. What does this say? Gorky, why would those costs go down if it was a pen factory or a car factory in Texas? Oh, you guys are communicating. Okay. Tired of dealing with the jive turkey drunks and pill heads, but 5 years off the road. Yeah. Can you define collapse in actual economic terms? Well, I think that in a sense is like, what is it you're talking about? A financial collapse? Are you talking total economic collapse? Are you talking, because like basically a financial collapse is essentially an economic collapse, right? Now, for some individuals out there who aren't exposed to debt, who have a bunch of hard assets, they have a bunch of supplies in their house, they aren't really, exposed to a financial collapse as much as somebody who is dependent on issuing out mortgages to people, who has everything, like every single thing that they own has credit attached to it. These people are incredibly exposed to the financial, to a financial collapse. So in that sense, their entire economy is collapsing, where you might be like, holy shit, I see buying opportunities everywhere. Like all these people are losing their stuff, and I happen to be in a position that I'm not exposed to any of those things. So your economy does really well. So what does the collapse look like? You're growing, you're doing well, you're acquiring all kinds of stuff. You're not collapsing, but that person, your neighbor, is. So again, how did you position yourself? And when you ask like, what is the collapse? Can you define that? What part, right? What part is it? And then how are you positioned for that? When you're thinking like total banking financial collapse, this is pretty devastating. Like this is like, you know, that's full out economic hell pain. And even the person who is sitting in a position in which that they are like, oh, I'm not exposed to any of that stuff and I'm sitting on a bunch of gold and silver. Well, yeah, grocery stores are probably going to be a little difficult to fill, right? Gasoline distribution is going to get very difficult. You're not going to be just like, all sitting pretty and happy with it. You're going to be suffering the consequences along with everybody else, but in a much different fashion because of the way that you position yourself to deal with it. So ultimately, you're going to have to let your imaginations run. Like, how is it that you are going to deal with a bank failure, grocery store failure, like, your job failure? There's collapses that can happen in all kinds of fashions that isn't necessarily going to be reported on the news. If you are just exposed in a way that says maybe your bank, or not your bank, but your company that you are working for, you know, all of a sudden just goes belly up and you realize all the money that you had invested with those people are now just essentially gone. Uh, what do you think these programs cost for our tax dollars? There are winners and I'm not sure what you're talking about there, but there are winners and losers in vital markets. Yeah. Live within your market, live within your means. Yeah. Buy beans and canned potatoes. I mean, ultimately, what I would do if you were looking to get started into supplies like that is, I mean, if you're a single person, it might be a bit much, but if you're a family, it's not. 50-pound bag of beans, 50-pound bag of rice, 50-pound bag of oats, and then eat it, right? When you get down to about 15 pounds or so left there, buy another 50 pounds or something, but eat it regularly. And just, if you don't like it, I don't know, and like maybe don't buy those things. But to me, like that's a very simple basic thing to have. If you have a 50-pound bag of each, it's pretty inexpensive. You could probably package it up to preserve it for a while longer, keep it dry and sealed up so it doesn't go stale or something. You could probably have it for a very long time. That's really cheap, and then you'll have something to eat. That's the important part, right? Having something, like, it doesn't, whether it's good or bad, it doesn't matter. When you're hungry, something is most important. All right, on 700 people still watching with 473 likes. Thank you so much for hitting that like button, everybody. All right. Okay, I like to put a 5-pound ribeye on the top of my rice. Yeah, that sounds really good. I sell freeze-dried foods from my farm for basically cost if anybody needs. Oh, hey, right on, Tyrant. That's cool. Yeah, anybody, I don't know if you have an email, but if you want, share it in there in the links and, see if anybody is in your local area who wants to do business with you, man. But that's really cool of you. I got rice, beans, wheats, oats, and lentils, and my mylar with oxygen absorbers stored in buckets 25-year shelf life. See, there you go. Right, and that's, like, we're not to that extreme anymore. There was a time when we had quite a bit, and considering we moved back out to the country, we've actually stocked up quite a bit more. But when I was living in town, like in the city, I was like not even 5 minutes from the grocery store. And that was pretty cool because, like, you could be in the middle of cooking, have, missed an ingredient or something like that, and just literally get down to the store and back in no time and continue on with what it is that you were preparing. That was pretty cool. We didn't keep a whole lot of food in the house because of that. We just, like, what we needed, we just went to the store and just got it. But then we moved back out here to the country, and so now it's like, 20-minute trip to go into town to go to the grocery store. So we had to make sure that we have plenty of stuff here. And now that we're, in that kind of mindset again, it's amazing on how much we have actually stocked up. And, if the power does go out for a while, yeah, we can, keep going for days, not months or anything, but go for a while. The there was a time when I could have gone for a very long time without having to go to the grocery store or anything like that. And I think about those times, it was just like the mindset that I was in wasn't really good. It wasn't like a good, healthy mindset that I was living. I had a lot of like conspiratorial things running through my head and really thought New World Order stuff. And, that was kind of just the way I was living and behaving. And so when I moved out of that, I kind of also moved out of that like hardcore prepper attitude as well. Um, but I still got a lot of the skills from when I was thinking that way. So if you did have to like kind of revert back into it in a timely fashion, you might be able to kind of like, quickly stock back up again. But if you're in the middle of a panic situation, you saw how quickly it goes. Like, the pandemic just proved it. It can wipe out supply in literally no time at all, a couple days, really, and it can all be gone. So that's like, scary for a lot of people who have nothing prepared, right? They have no anything. Yeah, right. Not a good safe space to be. All right. Simon, do you have a power generator? I do's. Yep. It's small, but it's enough that, you can keep the refrigerator going and the freezer, Uh, should we start quality food kitchens for not just homeless, but everyone who wants a cheap hot meal in mass? I mean, I don't see how that would be a bad thing, but ultimately, like, I had a small group of friends that we did something once a week where we would try to acquire a free meal. So each one of us had to find like a component to this free meal, whether we went out and like was hunted, like, like if I went out duck hunting or somebody went out fishing or somebody went out and just like, acquired something from nature, mushrooms, or if we went out and got some of those things and then traded it for somebody else who had grown some vegetables or something like that to try and figure out how it is that we could compile a free meal. And although like hunting, you do have to pay for licensing and stuff like that, and the same thing with fishing, but still, like, once that initial investment, then you can just go out there and catch, a fish and then go and trade it for somebody for, whatever it is that, you needed to finish off make a salad with or whatever. So we did that for quite a while. Like, we would try and do that once a week. There we go. Okay. And sometimes it wasn't easy, to try and come up with this free meal, but it was a fun thing to try and do. And we found like, people love the idea of it. And they were like, hey man, I want to try and get in on some of this too and try and contribute to this idea of creating a free meal once a week. So maybe start something like that with a group of friends and then see how big it goes. I won't die of exposure if you can make fire. You won't die of exposure if you can make fire. If people won't, or if people want government by the people for the people out of their lives, but don't want to lose control over things via private enterprise owning things, what's the solution? I don't know. I don't have a solution to it. The only thing that I do is try and understand what it is that I need to do. Right. And I look out there and I see things happening within the economy. I see things happening within the government. I try to study as much as I can in my own personal freedoms and rights and try to understand the Constitution so that I can behave in a way that I know that I don't have authority coming down on me. That's my personal decision and what it is that I've done. Like what it is other people are going to do, I don't know. Like I don't know. I can't tell other people what they can and cannot do with their lives. I mean, I wouldn't even expect them to listen to me in that sense anyway. I share what it is that I have going on, and some people relate to it, some people resonate with it, and other people are like, dude, it doesn't work for me. I'm out of here. Yeah, that's just the way YouTube works. I found that by sharing my experience here on YouTube, it's done something that I never thought would ever have taken place, and that is like sharing my experience with like being an alcoholic and recovering, being in recovery from that and the experience that I had to go through from that. Sharing that experience was not exactly easy to do, but I know it was part of my journey, and I know it was part of the reason why it is that I was able to the place become the uneducated economist to get to this position that I am in today. And I know a lot of it had to do with the the depressive state of being that I was in from drinking so much, and how it is that my life was able to excel once I got out of that. Sharing that story, I never thought would have so many people coming to me and saying, "Thank you for sharing that story. Thank you for talking about that. I haven't drank for 6 months. I haven't drank for a year. Dude, you've inspired me. I'm on my first month." I don't know how many, that right there is so touching to me. Like, that is the most unexpected surprise that this channel has come up with that I never would have ever thought would have happened. I didn't do AA, right? My wife did. She was really into it. I got a lot of residual because she went through AA. I wasn't there, right? I gave up cold turkey, hardcore, had to deal with a lot of issues because of it. And even sharing that with people has now come, like, people come to me and it's like, dude, thank you for sharing those life experiences, those life lessons, those ways of looking at yourself, looking at the energies that you're carrying and how it is that you can use this to better your life. Like all that stuff. I wanted to talk about Bitcoin and stuff, man. Like I didn't like none of that stuff was on my mind when I started this channel or even started creating videos. But as time went on, it kept getting pulled out. And I have to say that that's probably the best experience that I've gotten so far from doing all this is having those people come to me and say, thank you for sharing that story because it's changing my life. You know, cool, man. Economics, that's cool. Making good decisions, that's awesome. But for somebody to say, man, I think you actually saved my life, that like I don't know how to describe how an individual is supposed to feel about that, but I was just sharing my story. That's it. That's all I was doing. Uh, let's see here. Be real about it. 6.69 refi. Oh, I'm missing something. Okay. Shroom strengthens people to overcome addictions. Yeah, I don't know. I mean, when I grew, I mean, I'm in the Pacific Northwest. I'm in psilocybin country out here, right? I mean, we have some of the most powerful psilocybin mushrooms that grow the azarescence, and I mean, it's just kind of part of our culture up here, I guess. It's just something that the kids had done, and people to do, and anyway, I never microdosed. I never did anything like that. I megadosed. And yeah, so as far as like, medicinal or something like that, I'm not sure about that. Like I know that other people brag it up and they say how great it is and microdosing for like post-traumatic stress syndromes and stuff like that. Great. I mean, I'm all for people, but for me, I don't know. I don't know about that. What time is it? Hour and 39. All right. 592 people still watching. That's awesome. I'm glad you all are sticking it out. Ben, $1.99. Thank you so much. Bitcoin has 64% CAGR, but keep Glazing silver. Huh. You should watch The Lost Weekend. It's a great film. It's hard to be a scapegoat when you have paid for all the death and destruction around the world. I like the shrooms. Thanks, Ben. I like good shrooms and Swiss burger, and that's about it. They can and can't each individual. It's different with their alcoholism and addiction. 100% wondering how your life changed. How my life changed? From which part? I mean, my life is completely different from what I used to be. I mean, you got to understand, like when I was, 40 years old, I mean, like my car was essentially breaking down. I had no money. I was like, I don't even know, $25,000 in debt on credit cards and other debts and medical debts and bills and all kinds of stuff. Like it was just like, no, I don't even know how much debt it was. It was a lot. And I didn't have any prospects for anything. I would just show up for work every day and then drink beer after work. That's it. Like that was like the only thing I really remember. And I was like a nice guy. Like, don't get me wrong. Like people like me well enough, and I have friends and stuff. But I had nothing going on, and it was getting bad. Like to the point that I was like a month away. I guess like I had nothing, no money, and it was all gonna be over. And so when I quit drinking, Sarah went off to rehab and all that other stuff. Which is a pretty interesting story in itself, like, not to go too deep into it, but somebody in my life paid for it, and I don't know who it was, and it was a lot of money. It was 30 days in-house, and I can't tell you how much it was, but I'm guessing it was like $30,000. I don't know who. I've never been able to figure it out, but somebody in my life must have paid for it because I never saw a bill. I never saw it at all. And so I would love to think and and thank him as much as I can. Just let him know how much I appreciate it. But I have no idea who did it. Um, Sarah never drank again after that. I never drank again after that. There was no issues that even brought it up. Like a couple of times, we talked about how it would be nice, but we never did it again. And going from this low vibration, arguing, fighting, negative, depressive feelings to not really necessarily feeling that way anymore wasn't that great. Like, there's still fighting and arguing and stuff like that that would happen, but it started happening a whole lot less, right? And, paying the bills off, that kind of helps. So, like, when you quit drinking, like, now you got extra money. Like, it's amazing on how much money you drink. And so, we start paying off some of the debts and, life starts feeling a little bit better. And, I start the YouTube channel up. We ran with the YouTube channel for a while. I wasn't really making money with that, but, I had moved into town and, it was closer to work. And it was probably about maybe 3 years after I had quit drinking that I really noticed that there was a difference taking place in my life, like the way that I was thinking and acting and feeling, to the point that it was doing like more of a benefit. Like I was finding that I was actually able to acquire a little bit more savings and paying the debts down. And this like opportunities for getting vehicles were starting to present itself a little easier. These things were starting to happen more frequently the further that I went down this road of sobriety. And so the better I started feeling about things and the better I was thinking about the future. And, like I said, with the YouTube channel, and that was growing. So that made me start feeling a lot better, especially once it got monetized. And when it was monetized, like for a very, very long time, guys, like it didn't make that much money. If I made $10 off of a video, I thought that that was absolutely incredible. And so it was like most of them would make like $2. That would be like my average video, when it did get monetized and as I was growing the channel. But then as I got closer to paying off the debt, at the same time the channel was really starting to grow. And it started really changing at that point that I had the money to pay bills like whenever I wanted. Like a bill would come in and I'll just pay it. And I was able to like take the family and go do things like go out to eat. Like I didn't really take them to Chinese food. This is something that wasn't something I would do very often, but now I had this money that I could do it. Or we could go up to, up to the water park up in Washington, go up to Wild Waves up there. These were things like I had never really had done before or had the opportunity to do them, and now all of a sudden they're there. So the feelings that I was carrying from back in the day, being in that depressive state, really did not provide me with the ability to recognize or take advantage of opportunities when I saw them. Because I was drinking, I wouldn't even look for opportunities because I was too busy cracking beers, right? And like I didn't like somebody says, "Hey, there's this opportunity here." I wouldn't even see it or hear it because I was already committed myself to cracking beers at that time. So there was no way I was going to be taking advantage of an opportunity that was presenting itself because I wouldn't even seen it, right? This can be related to all kinds of things that I was doing in my life. Just that simple subconscious thought that no, I'd rather be drinking beer than anything else told me that there was nothing else that was more important, like trying to advance or do better or anything else. Like none of that was as important as cracking beers at the end of the day because I already chased my excellence. I wasn't about ready to go chase more. It was me time. You know what I'm saying? So once I kind of got out of that sort of mindset, everything changed. And it didn't happen quickly. It did happen slow, but it was always getting better. Like always. Like some months were better than others. Some months didn't do that great, but like generally speaking, every month was getting, or as time was going on, it was leading down a better and better path. Like I couldn't, like I look back and I would say, man, last year, think about it, we had those ugly cars and we didn't do anything, or whatever. We didn't have anything going on and we had those bills. And this year we were able to take those trips and we got these other vehicles and all this other stuff that's happening. And so like those were the type of changes that had started to occur inside of my life. And it was literally like I know I can pin it down to that alcohol, giving up the alcohol, and it took time. That's what I'm like. I think that's the hardest part for a lot of people to internalize and deal with is that when you have a situation like that, like in my mind, I thought, man, if I could give up drinking, the whole world would be awesome. Like it would just automatically just be this awesome place to be because drinking has put me in a depressive state and I don't like the way I feel and I don't like what I'm doing. And so if I quit drinking, the world is this all of a sudden going to be this awesome place. And there's nothing that could be further from the truth. Right. And I think this is the delusional thing that people tell themselves when they go to quit drinking and which ends up falling and why they fall back into drinking. It is not a good place. It doesn't all of a sudden just turn into this magical experience where everything is like awesome and all the flowers smell good and everything is just like this really cool. It's actually a very depressive, horrible experience as you realize as you're waking up from sobriety, all the reasons why you have been drinking. And now you can't cover those things up because you've been covering them up with alcohol. And now you're not drinking alcohol. So now these things are exposed and they're hitting you. All right. So this isn't fun. In fact, it's pretty hard for most people to deal with. And that's why going to the rooms, going to AA and then going through those experiences like that helps tremendously. Like, I don't know if I would have been able to do it the way I was able to do it if it wasn't for the fact that Sarah had gone through like the programs and doing that kind of stuff. And I was getting a lot of residual from her just from communicating with her. Right? So I have to credit her for a lot of my sobriety, even though I didn't go to AA. I essentially got a lot of that energy from her. So this is in knowing that it's not going to be easy, knowing that it's somewhat embarrassing in a lot of ways to just admit this, that you had this problem, that it was overwhelming you and that, it was actually deteriorating your life. To face up and admit that is probably one of the hardest parts of the whole thing. Once you do, right, the rest of it becomes a lot easier to deal with. It's not the hardest part is admitting it. It's just like, okay, I got this problem and I know I got this problem and I know I have to deal with it and I'm not sure exactly how and I don't want to ask for help because I'm embarrassed. Like, you know how many people just continue to deteriorate their lives and ruin their lives because they just won't fess up to it. Right? Once you do, like that's, I mean, I think that's again coming out here on this channel and just boldly admitting it, just saying, okay, yeah, I had an issue. I mean, I have issues. I mean, this is the thing, guys. 4:30, I get off of work at 4:30. At 4 o'clock, my mind thinks about beer. It's weird. It's the weirdest thing. It's been years. It's like over a decade since I've drank. 4 o'clock, I want to drink. 4:30 kicks in. I jump in my car. I get on the road. I'm driving. I drive right past the stores. I don't even think about it. I go right home. And I was like, oh yeah, I wasn't even thinking about beer. I had driven past those stores so many times that at that point the music's on. I'm thinking about something else, or I put on, or something on YouTube, and I'm listening to that on the way home, and I'm not thinking about beer. But at 4 o'clock, I do. Right before I get off of work, I do. Something from all those years of the half an hour before I get off of work. Right? It starts triggering, it starts getting into me, and it's still there, still today. It's a lot less, the draw for it is a lot less and all that. But again, like as soon as I get in my car and just drive, it's gone. It never goes away, guys. That's the thing. Like recovery is something that never exists. You'll never recover. Once you are there, you will always be there. There's just certain levels of there that you are. And for my level of there is pretty low, but then again, at 4 o'clock, it's not. Right? And it's weird. It's just like, I mean, it's just, and I kind of laugh at it, and I tell the other guys about it. It was just like, oh, crap, here comes the 4 o'clock, Jones and thing kind of going on. Okay, Simon. Oh, it's Benny. Oh, good Lord. Okay, Simon, you need to watch your speed on Leif Erikson. I do. I don't like, that big old Suburban. It don't. I mean, it kind of goes fast if you want it to, but it's just a big old truck. It don't really go that fast. Congratulations, Simon. Thank you. What is it, the Ralph? Thank you. I appreciate it, man. All right. It's never-ending process. The moment you stop trying is the moment you fail. Yeah, it really is. I mean, it really is. And it is a never-ending process. But, as time goes on, you don't think about it as much. But then again, you're always going to have thoughts of it at times, just like me. And so, yeah, it is. It's a forever thing. I think the hardest part for me, and still today, is being in a social group in which that everybody else is drinking and I'm not. That's probably one of the hardest things about giving up alcohol, is that in the initial setting, like, if you're at the bar or something like that, I go and I call the bingo game. So being at the bar is not a big deal. Around people who are drinking all the time, it doesn't trigger me. Again, it's the only time I ever feel it is at 4 o'clock at work. And it's the oddest thing. I get it. But all these rest of these people, they come in to play the bingo game. And just like anybody else, you're going to have a few drinks and beers and shots or whatever it is that you're going to have throughout the night, because it's almost a 3-hour game. And at the beginning of the night, everybody's very, engaging and, likes to communicate and stuff like that. But towards the end of the night, as people get buzzed, then I'm not on the same vibration as they are. And all of a sudden, like, it's not the same interactions and it's not really the same feelings. And that's really what ends up happening the most when I go to hang out with people, like, say, go over to somebody's house where they're having a campfire and everybody's drinking. Well, Sarah and I end up sitting there having a conversation because everybody else is drunk and having drunken conversations, and, we're not drunk. So it's just like we're not engaged in the conversations with those people, and it feels like we're somewhat outcasted because we haven't drank. And then on top of that, other people seem to have like a stigma against people, not a stigma, but like this preconceived idea that if you are sober, you judge people who drink. And that's really not the case. Like, there was a time when I first quit drinking that I had an issue with that, but it's really my problem. It's my alcohol problem, not anybody else's. And I don't give anybody else permission to own my problem, right? This is mine. Like, you don't get to deal with it. And when I think about like how other people might look at me being sober and me being like down on myself for the times that I drank, they almost relate that that's the feeling I have towards them. And that's not the case, right? But again, like, it's not me trying to do that, and it's not for me to have them have a meaning that they receive that It's just the general thing that ends up happening from it. So again, that's one of the things that I had to learn to get over, was like the fact that I'm not responsible for the way they feel, right? And if they feel that way, that's, again, it's like it's on them. It's not me. And that makes it difficult at times. Because if I was drinking, then they wouldn't feel that way. But again, it's not up to me to do that, to be responsible for that. Guys, how late do you want to keep going for? We got 588 people watching, 557 likes. That's incredible. $56.95 in super chats, because you guys are always so generous with them super chats. But it is getting kind of late. We're at, almost 9 o'clock out here. We started off breaking down credible threat theory, and then we ended up moving into talking about what we always end up talking about here on this channel is, good vibrations and alcoholism. All right. Simon, thoughts on the tariff pullback? Yeah, I did a video earlier today, Benny, talking about that. And to me, that's the whole thing about the credible threat theory. It pushed the elevated inflation expectation. It totally worked. We got neutral interest rate rising on that elevated inflation expectation. And if the neutral interest rate continues to rise and the Fed stands still, we're going to have an economy that is less restricted. And that is exactly what it is that I thought was going to take place, literally from years ago. So here it seems to be playing out. I didn't know that Trump was going to do the tariffs. I didn't know he was going to hype them all up as bad as he did and then just to back out for 90 days in, whatever excuses that he ends up putting out there and telling people that they better come to the negotiation tables to see if there's even a tariff that ends up taking place from any of this, or was it just literally just an entire gold machine, right? I mean, we'll find out here, but we got 90 days for them to do their negotiations and stuff like that. And I just find that I find it comical. Like, it just worked out so well for the credible threat theory. It's just like, it couldn't have been any easier. When you learn to make just enough and restrict your spending to support 20 plus beers a day, you have a surprising amount of money available to put towards growth when you quit and know how to live cheap. Yeah, it is. Nathan wants to know how you went from between 20 and 35 beers a day to nothing and full sobriety. I keep telling you guys, and 20 to 35, that's a bit much, Benny. I mean, come on, really. It was more like, 12 to 20. Yeah, I mean, 35, that's a lot of beers, yo. Anyway, I talk about it all the time. You guys get it. Credible threat hypothesis is just that, a hypothesis. Nah, I think it's reality. It's beyond that. Like, the monetary policy that I talk about, what I have named credible threat theory, is really just straight up the monetary policy coming from the Fed. Like, really, that's what it should be. But monetary policy, as people understand it, is not what it is that I'm communicating. So people would argue with me if I said this is the monetary policy coming from the Fed. Right? So I don't call it monetary policy coming from the Fed. I call it credible threat theory, because that's easier for people to then internalize as what it is that's taken place. But ultimately, I'm describing monetary policy in the most accurate possible way that it could be told from the Federal Reserve's point of view. Not from the Federal Reserve communication point of view, which is a much different monetary policy than their own monetary policy that they are communicating to the other central bankers. So they need to push an inflation expectation that is elevated. They don't communicate that into the mainstream media. Never once have they ever said that. But yet I can show you maybe 6 different locations inside of speeches, inside of documents coming from the Federal Reserve itself, that they say that they are going for a moderately above 2% for some time. Right? This isn't just some like delusional way of thinking or something that I invented. Right? The credible threat theory is the reality of the situation. And like I said, I could call it monetary policy, but people would argue with me about that, because ultimately it's not monetary policy. It's the central banker's monetary policy. When you listen to monetary policy coming from the mainstream media, it's something totally different. So there's two monetary policies that are being communicated. Oh, beloved, I don't really want to read your comments, man. You're too much of a pain in the ass. All right. Simon knows his stuff. Yeah, thank you. I appreciate that, Fair. All right. Ouch. Unturned the algo. Get creative with the spelling, please. Tariffs are shock and awe. Yeah, they really are. I mean, and you think about it, it's really like they haven't, like a shock and awe event to me is like, actually coming in and doing something. This is something that they're threatening to do. Right? Like with China, they might have been doing it more, but like with the rest of these nations, it was more of a threatening to do this. And that's the shock and awe that they got. They're like, oh man, what are we going to do? They're going to come down with all these tariffs, blah, blah, blah. Right? Only to be backed off for 90 days saying, you'd be smart to go to the negotiation table. Well, we've been hearing about negotiations, flexibility, all this other stuff the entire time. To me, like, if you were really wanting to be powerful with your tariffs, just do it. You go up to a country and you're like, pow! Tariff. You want to see? Anybody else? No, we're not backing off. You get that. You're suffering. Anybody else? That's threatening, right? That's threatening people. This whole, like, on again, off again, on again, off again stuff, eventually people are just going to go numb to it, and then they won't, they'll figure out something else to talk about. But that's all that really is. It's just a credible threat. Will they do it? Sure, right? But if you want to be really threatening, pull it off. Just do it. Scare the shit out of them because they've seen it actually happen. Right? That's how you do it. Actually, tariffs are really bad policy, so the treat is the real policy. So the threat is the real policy. Yeah, I'm not trying to say what is good or bad policy inside of it. I'm not. What I'm trying to say is the monetary policy. That's what I'm looking at. So whether or not in the end for the economy, if you think that tariffs are a good or bad thing, that's entirely up to you and the position that you have put yourself within the economy. I'm looking at the monetary policy, which is something very different, from anything else out there. When you got, you think about it, when you have a speech that says, today we face an altogether different set of problems stemming from a very low neutral interest rate, that is the short-term real interest rate consistent with an economy operating at its potential alongside low and stable inflation. Ironically, the problem we need to solve these days is the risk of inflation that is persistently too low rather than too high. And you see this speech from 2018, and then you're wondering, how in the world are you planning on getting inflation if you just printed up $4.5 trillion and failed to produce inflation, but yet you're just going to somehow just magically produce inflation out of nowhere? And then it happens. Like, did it happen out of nowhere? Not really, but for the Federal Reserve, they didn't describe how they were going to figure out to get an elevated inflation expectation. They just said they wanted one. And they didn't explain how it was going to happen. They said if they didn't do it, it was going to be painful. They already said it was going to be painful, but it was going to be even more painful if they didn't do it. Yeah, right here. Look, here, I'll prove that. Where's Powell's speech? Powell, where are you at? Here we go. All right, the persistent undershoot of inflation from our 2% long-run objective is a cause for concern. So they were concerned about running under 2%. This speech was in 2020, August 27th of 2020, before inflation, before COVID inflation. This speech came out. The persistent undershoot of inflation from our 2% long-run objective is a cause for concern. Many find it counterintuitive that the Fed would want to push up inflation. How were you going to push up inflation, pal? You couldn't even find inflation. You just, like, the whole Federal Reserve expanded their balance sheet from $850 billion to $4.5 trillion and failed to produce an inflationary scenario. But yet, all of a sudden, now they're just going to find it counterintuitive to push up inflation? How? How are you guys planning on doing that? Again, this is before COVID, right? Or COVID was just essentially kind of getting warmed up. All right. After all, low and stable inflation is essential for a well-functioning economy. And we are certainly mindful that higher prices for essential items such as food, gasoline, and shelter add to the burdens faced by many families, especially those struggling with lost jobs and incomes. They knew it was going to be painful. They said it right there. Essential items such as food, gasoline, shelter, and add to the burdens faced by many families, especially those struggling with lost jobs and incomes. It's going to be way painful for you to have an inflationary experience. However, right? Powell says, however, inflation that is persistently too low can pose serious risks to the economy. Serious risks to the economy. Everybody's going to suffer if we don't do this. Like you poor people, you're going to suffer bad, right? Because you're at the end of the line and you can't really afford this, so you're going to suffer. It's going to suck. You're going to find more homeless and all kinds of people that come from it. However, if we don't do this, persistently too low can pose a serious risk to the economy. Inflation that runs below its desired level can lead to an unwelcome fall in long-term inflation expectations, which in turn can pull actual inflation even low, resulting in the adverse cycle of ever lower inflation and inflation expectation. This was a problem for them in August of 2020. Powell's speech, August 27th. What does he go on to say here? To prevent this outcome and adverse dynamics that could ensue, our new statement indicates that we will seek to achieve inflation that averages 2% over time. And therefore, following periods when inflation has been running below 2%, appropriate monetary policy will likely aim to achieve inflation that is moderately above 2% for some time. In seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula that defines the average. Isn't that convenient? No mathematical formula for figuring out what the average inflation is. They are not tying themselves to a mathematical formula. Thus, our approach could be viewed as a flexible form of average inflation targeting. Our decision about appropriate monetary policy will continue to reflect a broad array of considerations and will not be dictated by any formula. See? That's why I follow these speeches. That's why I knew it was just like, you guys are going to be pushing for an inflation expectation. You don't have any clue or any idea on how it's going to happen. You're just going to make sure that it takes place. And here it is. Well, no kidding. Right? You needed one from COVID, got it. You needed one right now, still got it. That's, man, the luckiest, unlucky people in the entire world to use two crazy ass situations that are taking place that are destroying the economic activity that is out there, creating inflationary scenarios that totally work for the benefit of the Federal Reserve. These guys got to be the luckiest people in the entire world, right? I mean, to have two chaotic events that totally benefited them in this way. Wow. I mean, talk about coincidence. Wow. I mean, bet you that couldn't happen again. All right. Neutral interest rate is theoretical. You can't even actually know what it is. Yeah, but it's not necessarily theoretical. Like, it's a theoretical on where it could be, but the actual neutral interest rate exists. There is a spot there somewhere, right, where the Fed funds rate is neither accommodating nor restricting the economy. Because we don't know where it is doesn't make it theoretical. It's a real thing. We just don't know where it's at. So in that sense, it's a theoretical placement, but the reality is that it does exist. All right. So is now a good time to invest in rental properties? Lots of dear Danny boy, be afraid, be very, very afraid. All right, I think they have been issuing out treasuries to pay the interest for a long time while raising the ceiling. Oh, absolutely. There is nothing else to pay the debts. Just more debt. There is no you can't you can't like pay off the debt if you don't have like money. The money comes from debt issuance. There is no way you can pay off. Even if you were to pay off the debt, you would still owe. Like you would run out of money and still owe. There's more debt than there is dollars. So there's no way. Yeah. Well, I think, didn't I chew Beloved out this morning? I could see why he was mad. I mean, mom's basement's kind of cold. All right, the neutral interest rate sounds like the G spot. Okay, well, I guess that's a good. I guess that's a way of looking at it. I. Uh, uh, Beloved's on the other side of the wedge. Yeah, he really is. Benny, all right. It's still early 25 and lots of happenings by the minute. But what is your thoughts on the economic conditions in early 2026? I honestly think that there's going to come a moment in which that the neutral interest rate is going to rise due to the inflation expectation. This is what I see happening. Right? I see the elevated inflation expectation is pulling the neutral interest rate ever higher. If it continues to move up, I believe that it could, not saying that it is or will, but that it could end up where the Fed funds rate is today, like where the Fed is standing still. Or even if the Fed was to drop rates a little bit, say, a quarter point, or, 25 basis points or 50 basis points, end up finding the neutral interest rate meeting them. It is at this point where they want to maintain that position. Now, if the neutral interest rate and the Fed funds rate are aligned and the unemployment is low and the the recessionary pressures are not growing, I believe that this would be considered the Federal Reserve's absolute best sweet spot to be, right? No damage to the economy, neutral with their Fed funds rate. If the economy was to go into recessionary pressures or a downturn of some reason, this position would then give them the ability to actually drop interest rates far enough below the neutral rate to stimulate the economy. So if they were to take, the Fed funds rate immediately dropping to zero because of a weakening recessionary, pressure coming to the economy, that would actually be an effective tool. But until the inflation expectation pulls the neutral interest rate to the Fed funds rate and brings it up to that level, then I don't see that happening, like going into the future where the Fed can drop rates down to zero and stimulate the economy. They have to pull that neutral interest rate higher. It takes time. It takes time of an elevated inflation expectation to do that. So over time, if we find that the inflation expectation remains elevated, that I could only assume, yes, the neutral interest rate is rising along with that, and that this outcome is probably playing out. So you can imagine that if this is the case, like this, I hate doing these what ifs because it just keeps building up. What if, what if, what if, what if, and then you got all these what ifs that are all piled up onto this, this hypothetical situation. Okay. If the neutral interest rate rises, gets up to the Fed funds rate, and you have all these people who have been backing up on starting projects, investing into companies, like literally being pent up because they have no idea what's happening. The uncertainty has literally pulled them back from economic activity. If there was a situation in which this was to build along with the idea of the inflation expectation coming in the future, which these two could work together to do, right? You have the people backing up saying, I don't really want to participate right now because I have no idea what's going on. The inflation expectation rises off of the credible threat of tariffs. You push that ever higher, you get the neutral interest rate to move up. Again, we got like 90 days, right? So this is going to take time. You move that neutral interest rate ever higher, you get it up to where the Fed funds rate is. Now you got this pent up energy ready to go, right? Because they're sitting there uncertain, not knowing what to do. And you got this position in which that the Federal Reserve can actually drop rates to zero and stimulate the economy with that interest rate drop because the Fed funds rate is at a neutral position and being elevated. You see how all this is playing out? So could this be what takes place halfway through 2025, going into early 2026? Could this be like the trigger moment in which that they could actually lower rates because of some kind of weird recessionary pressures that are happening out there and actually create like a rocket ship moment for the economy as all this pent up energy is starting to take advantage of low interest rates going into the economy? I mean, I don't know. All right. I don't know if that's going to happen. Time will tell. We'll see how the conditions change, and maybe that theory will end up playing out, or maybe it'll dissolve over the next couple of months. I don't know, but right now, I think that could lead up. I think it could lead up to something like that. Again, you know, give it a few more months, and I might be like, okay, I'm backing off on that. That doesn't work anymore. Like the recessionless recession idea, that worked great. I mean, I called out the recessionless recession a while ago, saying like all these people are like, there's going to be a recession in 2022, 2023, 2024, 2025. And I'm like, okay, listen, we go all the way back to the pandemic, COVID, and I predicted it then that we are going to go into what a lot of people would anticipate a recessionary pressures due to the indicators like the yield curve or whatever, but that it's not actually going to play out. And that these companies who would normally get bailed out essentially already got bailed out during COVID. And unemployment came off of such a historically low level, and there was so many job openings out there that even if you had companies failing, those people were just going to end up going to work at the service industry. May not have been a great job, but it's a job, and if it's a job, you're not unemployed. So unemployment wasn't going to rise significantly, and these corporations were essentially going to be allowed to fail since the good corporations had already gorged on incredibly cheap debt during the COVID pandemic. So they were sitting on a buttload of cash, and they didn't really need to borrow money or to get bailed out during the downtime in the economy. So all these tech companies that were failing, they were essentially allowed to fail because it wasn't going to cause unemployment to rise significantly, since all these people who were losing their jobs were just going to go to work at the service industry anyway. Like, this is something that I had talked about quite a bit, right? The recessionless recession. But that's now over, right? I can't call the recessionless recession anymore because that's essentially faded out. Now we got a new situation that is coming. And could we run into a recession? Yeah, we could. But what if, right? We happen to have a bunch of pent up energy coming from people who are very uncertain, and at the same time, the elevated inflation expectation raises the neutral interest rate up to the Fed funds rate, which essentially makes them neutral. They're neither accommodating nor restricting the economy, right? They don't even have to move. You can just, relieve the tension that people are feeling from the uncertainty, give them some certainty to it. They have a Fed funds rate that is sitting neutral, and that pent up energy could come in and start stimulating the economy again. They don't even have to adjust the rates. Just keep pushing the energy back. Keep telling people there's going to be fear and uncertainty and doubt, and then they won't invest their money. They'll literally pull back on their economic activity. And then give them some certainty. You use the gold machine to create the certainty, and then push it all back out there again. And here you got a flood of people who are going to be spending their money investing because they've been pent up anyway. Who knows, right? I mean, but that seems realistic, doesn't it? That doesn't seem too far off. All these people thinking New World Order stuff is coming down. I mean, I guess that could happen too. All right, 615 likes. Thank you so much, everybody, for hitting that like button. This has definitely been a popular video. We're 2 hours and 17 minutes into it, and it's getting kind of late. We are, what? Jeez, 9:15. All right, all-nighter. Well, one rate, yes, one rate that influences others with much nuance is different. Danny Boy, hey Simon, I just wanted to say thanks. I've been listening to your channel for a while, and I really helped shift the way I think about the world and business. Well, thank you, Danny Boy. I really appreciate the comment. And that's exactly what this channel is all about, is to, help us understand what it is that we are seeing and taking place out there so we can make the best decisions for ourselves. I keep saying it over and over again, but that's the truth. I'm not here to sell you anything except for to help you understand it for yourself so that you can look at it and see it for yourself. And that's it. That's what I'm selling. And it's essentially free, So you just have to, invest the time to hear it. You're calm. I'm not always that calm. Sometimes I'm kind of lit up. I drink a lot of caffeine, coffee, and that gets me going. Okay, you're calm. No BS way of explaining things gave me the confidence to finally start this event I'd been thinking about for a long time. It's called Cake Picnic. Cool. I mean, it sounds cool. I mean, I like cake and I like picnics. How can it be bad? All right. I remember the lady artist in 2006 sold painting of Alan Greenspan for like 125K. Wow. Uh, you work tomorrow? I do, but I don't sleep, so there's that. I'm fortunate for that. I don't have to sleep. All right. I got a shower valve to replace in the morning. Yeah. I do have to get up at 6 o'clock or so. All right, M Rider 777. Do you think credible threat will eventually wear out with the people? Eventually, I'm assuming that's wear out instead of wear out. No, the reason why is because nobody knows that's happening, right? And as long as they don't understand the credible threat theory, then as long as they don't even know that it exists, then they won't know. They won't have any other understanding other than the one of their assumption, which is what the media is telling them. Because unless they come here to this channel, they're not going to know it. Or if, you know, they have a really trusted friend who can explain the credible threat theory to them without actually having to come to the channel, they might get it too. But it is such a small, minute amount of people who are going to understand and truly get the credible threat theory that they're just going to be able to do whatever they want, right? It won't wear out. The only way it would wear out is if all of a sudden the Uneducated Economist had 20 million followers, and then I was able to blast that across the entire globe in a way that just had everybody's attention. That's the only way that it would ever not work. So until that happens, I'm pretty sure they're going to feel pretty safe and confident in their ability to continue to deploy the credible threats. All right, I like Newcastle Benny, no carbonation. All right, Benny, you're so lucky Brody isn't in here, beloved. Oh, yeah, you are. Brody would have you all banned. All right. Simon, I like you. I will not promote you. Oh, that's cool. I mean, that's fine. I don't, I whatever you do, that's up to you, man. Like, I mean, I'm not asking, I mean, I ask people to like and share and do all that other stuff, but ultimately I'm asking if you really approve of the message to do that. If you don't like the message, then thumbs down the message. Like, serious, do that. If you don't feel that this is the appropriate message, then don't spread it. Like, I don't want you spreading what you feel is misinformation or misguided information or something of that nature. But if you honestly feel that this is the most appropriate method to understanding economics, to understanding the monetary policy, and to understanding how it is that you should be making decisions for yourself, then why wouldn't you want to share this with your family? Why wouldn't you want to share it with your friends? Like, I understand that they might have their own view of stuff, and I'm not, we're not here to change anybody's mind. But if they're looking for a way to look at the economy in a way that is just like most grounded, most appropriate for the working class individual, there is nothing else out there that does it like we do. All the rest of the people who are talking this stuff are flying at 30,000 feet. They all have millions of dollars. They all did it years ago. Very few people are talking on this level who work at a day job. Like, I work at a till. I sell 2x4s. I go down into the yard. I load those 2x4s in the back of a pickup truck. I go back up and I do it again. That's my job, right? And when most people come out here and they're talking macroeconomics and they're talking on this higher level, I mean, these are people who haven't done day job work like that in a long time, really long time. They have no clue what it's like to be like this, to live down in the working class area, to know the stresses and feelings of what it's like to try and make ends meet, to try and take care of the medical bills, to deal with the idea that you might get fired or lose your job and not know how it is that you're gonna pay your bills. You like there's that's a whole different world that they're living. you know All right, Huan G, Brent Johnson, Jeff Snyder, Lynn Alden, Luke Gorman. Absolutely. Like the best, right? I wasted so much time in college studying macro and microeconomics. You have your stuff, Simon. Thank you. You know your stuff. Yeah, thank you. Uh, Dude, seriously, I love the name. Thank you, I appreciate it, man. And you're not the first one. I've actually had other, people tell me, it was just like, man, I got these economic degrees, and you're just like, I even work with people who have like really high level economics degrees, and you're just like, you run circles around them when you talk. And yeah, I mean, I put a lot of work into this. I put a hell of a lot more work into studying economics than most people do who have degrees. Like, I know I did. Like, I put 2 to 8 hours a day worth of work into this stuff. On the weekends, it wouldn't be beyond me to put 8 hours of study, research, putting content together. I mean, I'm out here, what, 2.5 hours? I did almost an hour earlier today. I mean, this is what, 3 hours, over 3 hours of worth of work that I put into this, into creating this content today. It's like I am constant. This is all I do is study and research and try to, come up with a better way of understanding and explaining what it is that I'm seeing here. All-nighter, laugh out loud, fast. It's stuck that way during the live streams. Yeah. I don't get it. Like, I mean, if I do a regular recording on my video on my phone, it's not this way. It shows it the correct way. But as soon as I fire up the app, it flips the camera around, and I'm not sure why. Just wanted to let you know you've had a real impact. Appreciate you, man. We managed to get 20 plus million views of our last event. New York Times even wrote an article about us. Wow, man. That's incredible. 20 million views? Holy moly. All right, guys, I'm going to call it quits, but I wanted to just say one thing. I was doing some research, looking through my analytics, and something that I came across, and I didn't even realize it was so many hours, millions and millions of hours of view time I've had on this channel. And I've talked about this before, but when I did the math on it, it worked out to like 4.5 lifetimes. Like, I figured it was like 85 years that, somebody might live. And the amount of hours of view time that this channel has, it would have occupied the lives of 4.5 people their entire life. And I think about that, and I'm thinking, holy moly, man, I put out content and grasped the attention of 4 whole lives. And having, like, essentially taken 4 lives, right? I mean, if you take their attention from them, you've taken that. You've taken their life. You're taking that attention is the same thing as taking their time. That's taking their life. And so it was almost like a shocking feeling, like an upsetting feeling that I was looking at it like this. It was like, holy moly, I didn't realize that I had occupied that much content viewing. Like, that's how much view time my channel had received. And I thought to myself, it's okay. It's okay that I did this because I'm actually sharing something that should have been useful. Like, I wasn't trying to just take something from them. I wasn't just taking their time. I was putting something in there. I was putting something in return back out there. And so when I think about that, I think, man, how many people out there are taking the lives of people when they have a million views and they have all this attention and they're putting out a bunch of garbage or whatever? They are literally taking the lives of men and women. They're taking the lives of people. And are they thinking responsible? Are they thinking, man, I'm going to share the best information I possibly can because I need to be responsible for the lives that I take? It's a serious situation. It's not just something to screw around with when you look at it on this level. Every time I fire up this camera, I'm essentially taking somebody's life from them. I'm taking their time. I'm taking their energy. I'm taking their thought. All right. Uneducated Economist. You guys let me know.